Hello guys, Money Max here back with another video. Welcome to everyone. Apologies, I'm late on a bit. Well, I'm a bit on later than I'm supposed to be. So I hope you guys are doing good. All right, it's been an interesting one with the markets at the moment where we are right now. I'm intrigued to see what happens really because I believe we're about to have some really fantastic moves, and we really are at a tense point. Okay, and I'm gonna rehash over this and let you guys see exactly what I'm talking about later on. All right, but this is part 4 of how not to fail trading crypto. And we've had a fantastic time. I really hope you guys have enjoyed the teaching. I tried to bring you something fresh, okay? It's unplanned, unscripted, to make sure that you guys have the best advantage when it comes to taking advantage of the positions that are being provided by the markets. Now, as a trader, you know, sometimes things can become really sticky if you don't know, what you're doing. That's important to remember. And it can become even more sticky when you take a position based on how you feel and not because of trading analysis, which is something you do not want to do. You never want to do, in fact. You always want to trade based on market analysis. So, for me, being a trader is a lot more to do with I would say, how I feel in terms of how I feel gets put to the side and what I think logically is what gets put to the front. So if you're going to trade, before we continue with anything, how not to fail in trading, definitely do not use your emotions to trade with. If you feel like the market is going to do a bullish run because everything's on its way up, that's an instant way of failing, okay, which you don't want to do. You want to make sure that you follow the market from a healthy perspective of looking at price action for what it is. Don't try to trade based on how you feel. Because again, if you try to do that based on how you feel, you're really going to find yourself in a bad position and you don't want to do that. Okay. You want to trade based on what's going on in the current market right now and nothing else. Okay. So if you don't do that, guys, you're going to put yourself in big trouble. All right. So try your best, please, to focus on getting into the market using analysis. All right. So I'm going to do some breakdowns. All right. Let's have a look at what the market is trying to do. See what opportunities are available for us. All right. We want to make sure that we get in at the right time and get out at the right time. Okay. So I will go and do an analysis. I'm just making sure that I prep your mind, guys, because I want to make sure that when you guys are trading and you're focused, that your mind is not kind of split all over the place, trying to work out, oh my God, I need to take this because it's going to go long. Oh no, this is going to go short. I don't know. You don't want to do that. You want to trade with comfortability. You want to trade with good analysis and you want to make good money. Now, again, I'm going to shout this out from the beginning. Okay, and I repeat, if you want to get involved with trading crypto, my best recommendation to you would be Hugo's Way. All right. Number one is universal. It's US friendly, which is very difficult to find a broker that accepts US citizens or clients because it's the tax brackets and different things, the tax infrastructure there doesn't really allow for much forex trading to go on, or let alone crypto trading in that degree. So if you want to get the best leverage, have an opportunity to make serious money from trading crypto and things of that nature, then what you'd want to do is go through that route. Okay. So and I'm going to say this carefully, if you know what you're doing and you know how to trade, then you definitely want to go down that road. Okay. Because at least you're going to have the chance to be able to grab some really good activity going forward. So keep your eyes peeled. All right. Let's see what the market provides for us. All right. I'm going to crack on with the analysis now. We'll start off with Bitcoin as usual, but I'm going to be skipping through looking at a few different things because, again, there are there are some nuances to the price at the moment. There are different things that are going on that I want us to all be aware of. I don't want any of you to be trading or looking at the price action and just again using your emotions. There's quite a few things going on. And because of that, I want you guys to be just prepared always for what the price is going to do. All right, so let's get cracking. I won't talk anymore because I've talked long enough, and I don't want you guys to think that I'm just a talkative guy and I'm not giving you guys anything. But I'll be short and sweet with this though. I promise you that, because we have quite a long way to go in the price before we, make our way to where we need to. So, all right, guys, I think I've whetted your appetite more than enough now. So if I don't start doing something now, I'm gonna get all of you angry. All right. So, all right. Let's crack on. Let's do some analysis. Let's look at the price. So I want to start from the daily structure here. All right. Let's go for it. So from the daily structure that we have right here, at the moment, we can see that the price has continued in this bullish piece of price action that we've been looking at. Now, we had a major break here of demand, all right, where the price used this demand zone as a supply zone. Now, for most of the month of August, we had the price entering into this area and not doing much until we had more of a break. Literally, yesterday is the first time the body of the candle has closed above 50,000. Okay. We managed to get the price closing at 51,566, which is amazing. And I expect the price now to get up to this 53,360 mark right here. And from this point, again, whenever we're looking at the price now, until Bitcoin assumes a new all-time high, one of the most important things I want you guys to keep in mind here is to the left of us, because we have an all-time high and we're not in price discovery mode. Now, what is price discovery mode? So starting with what we have with this lesson, okay, about how not to fail with crypto, one of the things you need to analyze, I'm going to put this here, how to analyze a cryptocurrency. Crypto currency or crypto chart based on technical analysis. Okay. Now, this is a long title. I wish I had a short and sweet one, but this is where we are at the moment. So how to analyze, not analysis, excuse me. So how to analyze a chart based on or a crypto chart based on technical analysis. Now, number one thing that you need to work out first before anything, and this is going to be a season of steps. The first thing that you want to do is work out if the price, this is important, the current price is the all-time high or ATH. Now, this is going to very largely control how you analyze the price. Okay, why is this? So if I take off this line for a moment here, why do we want to work out whether the current price is an all-time high? So if you open up a chart, you've done your previous analysis in the other videos, which I've discussed as to what you're looking for. And then you've come to the position and the place where you're happy with what you're looking for. You're happy with where price is going to go to or what you want to get going moving forward. And you're like, okay, I want to trade this. I like this cryptocurrency. I like how it's moving. But then the number one thing that you'd have to do before you get anywhere is you need to check whether the price is in two places. Okay. There's either two places that the price of any crypto chart or in other words, in any other financial market, it would be the same. All right. There's two different types of price action or two different types of charts. Two types of charts. So the two types of charts that we have here, I'm going to go through, I'm going to put them as A and B. So the first type of chart we have is non-price discovery. And I'm sure you guessed it. The second would be price discovery. So non-price discovery, what does that mean? It means that there is price action history higher than the current price. Now I'm going to need more space because MetaTrader cuts off your characters than the current price. All right. So non-price discovery means that there is price history, which is higher than the current price point. So for example, with Bitcoin at the moment, the price of Bitcoin is 51,575. The highest point in history that Bitcoin has ever got to is this price point right here, which is $64,756. Okay. Now this $64,756, all right, where we are at the moment, this is the highest point that we've had in history. When the price gets above this point, we're in the second part or the second type of charts that we can have, which is price discovery mode. All right. So price discovery mode means that we have there's no price action history higher than, I'll put this here, the current price. So there's no price action history higher than the current price. So I'm going to have to do this again. So let's get this out. So then the current price. So how do we approach these? Now, ideally, when you're trading, it's unavoidable that at one point or another for a crypto asset, especially for the next couple of years, they should be making new all-time highs all the time, because over time and over history, these cryptos the crypto market will evolve, the market cap in general will get larger, and cryptos that have are good for the future would come to the forefront. And this is just what's going to happen. It's unavoidable. It will happen. And this is what we're going to see. Okay. So when we're looking at these price action points here, this is the number one thing that you want to make sure that you go and work out first of all before anything. The question is, does the crypto that you're looking at, does it have price action to the left? So in essence, what you want to look for is from the current price, if you look to the left, now you may have to go up to higher timeframes, whether weekly or monthly. Is there anything to the left of where the current price is that we can use as a reference? So here's the keyword that we're bringing in now. I'm trying to break this down as nicely as possible for you so that you can understand it, is price referencing or price reference. Okay. All right. Now, as a trader, there's three things that we're always doing. Okay. If you're a trade analyst, you're a crypto trader. All right. Now, if you're an investor, you're still a trader. And if you don't do this, you're not a proper investor. I know for many of you, you believe in just, okay, I'm going to look at the project fundamentally, but I'm not going to look at the technicals. Well, the technicals, for those of you who've always argued this, whether it's fundamentals or technicals, I'm going to go through this route first before I say what I'm saying. So what does fundamentals do when we look at a crypto? So uses of fundamentals, okay? So the uses of fundamentals when it comes to a cryptocurrency are as follows. So number one, what are the uses for fundamentals in crypto anyway, to understand where the project is in terms, I put this here, in terms of goals set, okay? Now, I want to add some more writing to that, but the first thing we want to put, I'll put this on the left here instead. So what are the uses for fundamentals to understand where the project is in terms of goals set? Now, why do we need this? If a project has certain goals set, which is usually in a specific time scale, and they're achieving those goals, then that means that the proof of concept of their project is flourishing, and that is going to be positive for the price over time because more value is being added to the system. So from a general sense, we know that the project should do well, okay? Why else would we use fundamentals? All right, we can use them to isolate major changes to the project, staff, or market sometimes, okay, depending if they're a market leader. So we use this to isolate major changes to the project, which will have positive or negative effects on crypto. Now, these are just a few of many. I'm just giving 2 examples here, but there are many other uses for fundamentals. But the fundamentals of a crypto in the current market that we're in at the moment, fundamentals is highly important, okay, because there is the make or break of a project. However, why would we use the technicals? Now, you have to use these together, and I explain to you why you have to use these together. But if I go to uses of technicals, the number one reason for technicals that most people think of is to get the best price, okay, which is true. You use technical analysis to find the best potential buying area. Now, because crypto market is about everything going up right now, I'm talking from an investor point of view, potential buying areas, okay, or selling areas if you're trying to sell. I'll put those in there. So let's just make this a bit more spacious, buying or selling areas. All right, and this is one of the first things to do. But one thing which is important here, welcome to the School of Money Mics, and this is something that most people wouldn't tell you, is to analyze, all right, specifically retail trader activity. That's the first thing, retail trader activity and psychology. All right, retail trader activity and psychology. Now, why is this important for you to understand the retail trader's psychology? All right, because market manipulation on the market order book of any financial asset is based on how retail traders can be manipulated most of the time. And number 3, what you want to be able to do is analyze institutional money activity or institutional investor activity. Okay. These two, the latter two, most people don't talk about it because they don't know how to technically do that. Fundamentally, you can do, because there can be a news piece that says literally, I don't know, PC Currys or Target buys Ethereum. All right. Well, I mean, that's great fundamentally because people are going to say, wow, if they're buying it, the price should go up. But then technically speaking, you can be able to, let me use the correct grammar, excuse me. You can, and you really could be able to, past tense, find out what exactly or where the entry point was going to be for that purchase before the fundamentals happen. So in other words, I'll put it this way to you. All right. The rule of thumb when it comes to price action here is that technicals is faster than fundamentals, okay, as a rule of thumb when it comes to price action. Now, why do I say this? Many times, and this can even apply to, especially in the Forex market, for example, many times the people who are delivering the news to the world already know the news before they've delivered it. So if the news is going to be something compromising to the price, what do you think they're going to do? They're going to restructure, move money around in a way that makes it conducive for them not to take the effect of what the news is about to deliver, because the news is going to come out anyway. Okay. So whether the news is delayed or it comes out, price action moments before that or days before that even will be restructured in that way. Okay. Now, if something's going to be technically good for the price, then the market will restructure itself because larger money in the market would know this beforehand. That's why I always say that the speed that you know information is the most important. You're usually not the first person to know something, but you don't want to be the last person to know something in this market or any market, because you're going to get the raw end of the stick. Because fundamentally speaking, investors who don't look at technicals, they hear, I don't know, the Central Bank of Australia is going to use Ripple, and everybody goes, yay, and they buy. But then the problem is that technically speaking, fundamentally, when it comes down to the money, institutions would have known that already before they've released it to the public. You have to always keep it in your mind that the public is usually the last to know about something. The only thing that the public has known about before institutions and the big guys is crypto, Bitcoin, and the rest. Okay. This is it. This is the only thing in history that I can think of that institutions had no clue about first, because it was released to a small group of people, to the layman. So that's why crypto is so special in the first place. So ideally, you just want to make sure, really, that you keep your eyes peeled on exactly what is going on for the future. So these are the two things that fundamentals and technicals have uses for. Now, why am I saying this in relation to price references and price charts? So how not to fail in trading? Whenever you're trading, if there's a crypto that is in price discovery, so it means the current price is lower than the previous all-time high, then you have a reference to the left that you can use to be able to analyze the price. So when I come on here every day and I talk about, okay, Bitcoin is going to do X or Y or Z, when I come on here to say all of that, the reason I'm able to analyze Bitcoin the way I am is because there's references to the left. We've had, a mini crash in the price, which has provided different order blocks, different supply and demand levels, which are important that we can use as a reference to track where money is moving in the market. So for example, this area here is a daily demand zone, so a very strong area of price. When the market was crashing, we had a very strong reverse of the use of this order block. Now, this order block is for demand or for buying. Once we saw the break beneath, the price used the same area to sell from. Now, in August, the price has come back to this point, and then yesterday we've had the first close back above here. Now, because the price has closed back above this area, what that's telling us is that the amount of demand liquidity on the total market order book is greater than supply at this price point. So by right now, we're back to levels of demand that we haven't seen since April. Now, that one analysis alone would be able to help you to have a greater idea as to where you should be looking to maybe place a buy trade, or potentially there may be a pullback or a sell. Okay, this is how it works. So when you see me referencing to the side, price referencing comes in two forms mainly. All right, so the first price referencing that we do, all right, is going to be looking at previous. Now, if you're a support and resistance trader, I don't use support and resistance because it's not the most accurate way to read money in the market. So I look at the previous supply and demand zone levels, okay? Or I'll say areas because they're not actually levels, they're a range, all right? Second thing that I want to do for price referencing, which is a more obvious one, is mark out the previous ATH all-time high. That's one thing. Now, these are the major two things. Now, there are other things here which are even more complex, but we can go through them. All right. The next thing that we're going to want to do, number 3, is mark out algorithmic inefficiencies in the price. Now, I won't do number 3 today because it's a lot and it takes a long time to be able to explain and break down. But we want to look for mark out algorithmic inefficiencies in the price. All right, because that will give us a key as to when to know when, even though the price is bullish, for example, when there would be a short, because the market order book needs to level itself out and make sure that supply and demand orders are filled one for one, as it should be. Because if someone's buying, somebody should be selling. But in the complexity of it, there's inefficiencies in different price levels left that need to be fixed out. And this is what we're looking for. Now, very simply, if you wanted to start analyzing today, the next major area we can look at would be this area here, this demand zone. We saw the price push here very strongly long. And when we had the crash, the price broke beneath this area. Now, when we have a break and a return, the price, for example, if demand is broken and the price returns here, it will become supply. And we see that very often in price action. So now the long that we should be expecting here, if I was to take a trade from where the price is, if it never stopped going long, I would enter here and be closing here as a short swing trade. Okay. When the price gets in here, I would be weary of trying to look for another buy just yet, because what I want to be doing is testing out to see how much supply versus demand there is in this area. If the demand is stronger than supply, we can call this a litmus test. So what I usually call this is a litmus test. Okay. Now, I took this term from when I studied chemistry in uni. My degree in master's was pharmaceutical science. So I did a lot of litmus tests for pH testing. So I'm going to call this the crypto litmus test. Okay. The crypto litmus test. And it's very simple. All it really is now is that, number one, if the price reoptimizes a previous demand zone for original use, all right, then we should be looking for a buy. Simple. As a buying order block, we're going to be looking to buy. That's how it runs. All right. Second thing that we should be looking to do here would be for us to look for the opposite. So if the price struggles, very simply, and you can use this as a beginning and a lesson is done. The other way that we can do this is if the price uses a demand zone as supply and price struggles to buy, push further, or let's just leave it like that to make it less complex. You should be looking to sell, all right? Because what that means is that if, for example, if the price got to this area here and it started to sell off, this demand zone has become a supply zone anyway because we've had a body close beneath this area. All right, so I can delete this for now. Or I can just actually use this. I'm going to take this rectangle and put it here so we know. So this candle right here, when the body of the candle, of this bearish candle closed beneath this zone, this is a very clear indication that we are going short. Now, whenever the price does this on the market order book, this range of buying becomes an open area where the price, if it gets back to, can be used either for buying again, or the price will get to this point and start to sell. So as a litmus test, when the price gets here, I'll be watching to see how does the price react. Does it struggle to push further long, or does it reverse to go short? This is the question. Now, we want it to go long, of course. We want the price to continue going long, but this is the question as to how we will be able to quantify what we're doing. So from a technical standpoint, this is the first thing you'll be looking at. And then on the fundamentals, you want to be tracing to see, now fundamentals, okay, guys, always remember this, are the triggering point for a technical move that's already going to happen. So for example, if Bitcoin is going to go here and the price maybe was hanging around here, fundamentals can act as ignition to light the flame, to cause the price to get to where it was already supposed to go to. All right. But the technicals maps out where the money is and where money needs to go to already. So as a technical trader, you're always one step ahead of fundamentals if you know how to read them properly. The fundamentals just creates the environment to allow for that kind of liquidity, whether buying or selling, to move in the market. So to end of this short lesson, this is what you want to be looking at when it comes to looking for a trade or for a position. All right. Now, with what we've got here with Bitcoin analysis, today is Monday and not much is going on. So I'm going to do kind of a different style of analysis. I'm going to stick just to Bitcoin today, and we're not going to look at the other coins, but only because we want to see what Bitcoin does, and we're going to use the advantage of Bitcoin to be able to look at other cryptos. So to end this off here, all right, when we look at Bitcoin right now, we clearly have a bullish trend, and we're looking for the price to potentially continue. Now, I've seen something here in the 30-minute time frame where I believe that Bitcoin might possibly give us a short-term short. Now, we had a very strong induction for itself from this point right here. So this is order book activity that the price has performed. Now, the demand zone that was created, let's zoom in to look at it very carefully. The body of the candle has closed above, which gives a sign of bullish activity. If we get any close above this supply zone here, then the price should be making its way above this area. It will fill out the wick and we should see a continuation, all right, going forward. Now, the price would need some sort of demand to be able to carry it forward, which is why I'm suggesting that possibly we should be seeing the price push even lower. Now, even on the 30-minute, there's a very good demand zone here we can use. Why would I use this one? Now, focusing on price referencing again, what does this demand zone actually mean? Well, before that, we had a bullish run, which the candle right here was relatively large. And then we had this area here, this red candle, which formed an area of demand. And what we see afterwards, which is on Saturday into Sunday, we see one first candle of bullish activity, then a very strong one near the end of the day. So this area right here becomes our demand zone. So if I put this right here, this is an area of demand zone. All right. Now this is an intermediary one. Okay. Intermediary. Now to explain the details of why, we'll do that in the next lesson. So this intermediary demand zone that we have, what can we say about this? Well, in this range of order block, if we were looking at the market order block, what this in essence is telling us that between the range of $50,640 up to the point of $50,739, that range right there presents an area of strong enough bullish pressure to cause the price to continue going long. So what can we do as a common sense thing to do? The easiest thing we can do is that if the price returns to this area, we expect the bullish liquidity. At this point, what does this mean? If the price comes back within this range, is the same thing as saying that at this range, demand is greater than supply. Now, if demand is greater than supply, it causes the price to go up. If supply is greater than demand, the price will go down. So this is what we're looking for right here. And the expectation is, I believe, that the price will find its footing and come back down to this region. Now, what do we do if it breaks lower? Now, if the price breaks lower, so we have a reoptimization here. So you have a reoptimization for demand as supply. Then when the price returns here, then we should be looking for a short back beneath this area. And the target would be the low of yesterday. All right. If the price is able to break that demand zone area, then this is what we should be looking at. So for now, I'll keep my eyes peeled on this. You guys keep your eyes peeled on the same. From tomorrow, we'll take it deeper to look at different charts and see what's going on. I hope you enjoyed that lesson, guys. So Money Marks, I'm out. If you want to jump onto Hugo's way, one great thing that we've had recently, I'll show you guys, is that we can now trade a little bit more than just Bitcoin, Ethereum, and Monero. If I scroll down here, I just saw this last night. We can actually trade Polkadot, Solana, Luna. We can also trade Cardano, which is fantastic. So I can actually look at Cardano from MetaTrader now, and also Tezos or XTZ. All right. So we have quite a few new additions here. So we have an opportunity to make some serious profit in this bull run. And I'm hoping that you guys will jump on. So the link will be in the description below. Follow that link and I'll catch you guys in the next one. So everybody take care and I'm out.